Welcome to
We're live.
EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey, folks. Welcome to the live. Hope everybody's doing well today. And Brian, you know what? I think I've come up with a new four-letter word.
What's that?
OPEC.
Let's see.
Ask any who, and they'll have this to say: there is no place like Whoville around Christmas Day.
Right.
So we are going to talk about OPEC guidance, which is coming to you tomorrow. It was originally scheduled for when, Bill? The first.
It was Sunday. This was what it was.
Yep. It was
They
Sunday.
delayed it till Thursday.
Yep. And so what we're going to talk about today is we're going to talk about the past, the present, and the future. What is OPEC Plus really considering? You can speculate why they delayed. There's a lot of different thoughts and speculations around there. But I would say speculation is speculation. Unless you're in the room, it's just somebody guessing what somebody else is saying. So let's dive in. We're going to take a look at the past. We're going to take a look at the present and the future. And please ask questions in the comments section, depending on which platform you are on, because this will help us. We will answer those questions towards the end. We're going to try and do this in about 30 minutes, but we will stick around and answer any questions that you may have along the way. So did I miss anything there, Bill?
No, I don't think so. I think it's going to be interesting what OPEC is. And we're going to go through some of what we think where it could go. And then we'll just have to sort of wait and see what these guys are thinking, because whatever they're thinking is not what I'm thinking.
Well, listen, let's go ahead and dive in. So where are we with OPEC? There's a lot of different circumstances out there. The past, where we came from. In December of 2023, OPEC Plus cut 2.2 million barrels a day, with Saudi Arabia leading the pack. Actually, our charts show quite a bit more than 1 million barrels a day, but that's publicly what is stated out there, that it's 1 million barrels a day by Saudi Arabia. Non-OPEC growth. So this is the consideration in December of 2023. Why did OPEC Plus decide to cut barrels? Well, a couple different factors, and we'll cover each one of them. And again, we're going to cover the past, present, and future. Non-OPEC growth in supply in December of 2023 versus 2022, the U.S. added over 1 million barrels a day of production. Canada added barrels. Brazil added barrels. A lot of the places started adding production back to the place, back in place. And combined with that production increase from non-OPEC sources, China demand back in 2023 saw a 5.4 year-on-year decrease. When's the last time you saw a year-on-year decrease coming out of China, Bill?
You saw it back in the pandemic. 2020 is when it happened. And so,
are we really counting that? We're not going to count that, are we?
well, if you don't count that, you can't count the rise afterwards.
That's true. That's
okay?
true.
That's true. Brian, you can't always have it going up and to the right all the time.
I think your brain is a thick candy shell.
Hey. Did you and need to remember December 23 is actually the peak for US oil production as well.
Right. And we'll actually dive into that a little bit later. But let's take a look at the past where we came from. December 2023, that's when they announced the cut. What led to that? Well, in from September or mid-year, June, July to September, October, we had a $20 a barrel decrease on price. So OPEC Plus was evaluating that drop. And why was that drop happening? Well, it happened for a couple reasons. This is actually what they did after that. Saudi Arabia was doing the heavy lifting. But the reason that they were doing this is we had increased supply in the United States. As a matter of fact, I'm going to hop into this. Just looking at the United States right here, let's take a look at it, and we will go from here to right there. And you can look and see that let me actually zero this in a little bit more. We added in the second half of 2023, we added 1 million barrels a day in the United States. So this is one of the big reasons that in the December meeting of 2023, OPEC Plus decided that they were looking at the supply from the global perspective, which again, roughly global supply and demand is roughly about 103, 104, something like that. And when you add 1 million barrels a day, that is a lot to the equation. So we had a $20 a barrel price drop at the same time that production in the United States was headed up. And you can see it right here that in the June, July period to October, November, we grew 1 million barrels a day. That surprised the market. It actually didn't surprise us because we'd been watching rigs prior to that. So, so anyhow, what happened after the cut? OPEC cut the production, and you can see they went from roughly 35 down to 33. Now, since that time, they've kind of stalled out their production cuts. But there's some months that are up, some months that are down. Non-OPEC compliance is of a concern. Saudi Arabia is doing the heavy lifting. If you can look at this, in October of 2022, they were producing close to 11 million barrels a day. They're now around 9. So most of that 2.2 million barrel a day cut is really being consumed by Saudi Arabia. They're doing the heavy lifting, right, Bill?
Yes, and Saudi Arabia sort of reminds me of someone. Let's see if I can remember.
I'm Luke Skywalker. I'm here to rescue you.
Yeah, that's there he is.
Often Saudi Arabia takes the role and takes the lead, and most of the other OPEC members and now OPEC Plus members actually take that cue. And what we actually track in our system is we actually, when we're looking at supply, we can go in and see who is producing how much. And let's actually go down there, and you can see different trends when you evaluate different countries. I'm just going to look at the United Arab Emirates, because what is happening in the United Arab Emirates, Bill?
Yeah, they brought on some new fields. In fact, they're right now petitioning OPEC, I guess is the word to say, to increase their slice of the pie by 300,000 barrels for 2024, and on a way up to an additional, well, from here 500,000 barrels, but after 300, another 200,000 barrels in 2026.
So wait a second. They're looking at, let's take this pre-COVID to today. And when you look pre-COVID, they were around 3.2 million barrels a day.
Right.
And then they dropped, as everybody did, due to COVID. Then they recovered to the 3.2, but then dropped some more. And part of that is the voluntary cuts. So
And
they
so,
want to.
but you're now looking at production versus production goals. This is real. This is real production.
Very well said. Very well said. Because when you look at production quotas and supply capacity, we always look at production because that shows exactly how much each country was actually producing. So from UAE's perspective, they want to go from this 2.9 level up back up to 3.2. So that is about roughly 300. They want to resume
Right.
that level. But then
And
you're
then
saying they actually have an increase above and beyond that,
yeah,
right?
they'll be able to. Their plan is to be to bring on a total of 500,000 barrels by the I think either the first quarter of 26. I can't remember if it's first or second quarter, but
Right.
they're on a growth curve,
Yeah,
and
they are
so
on.
and I'm not sure whether they're going to bring on that 500,000 at the end of 25, and it will average down to a 300,000 barrel a day increase
Well, and I
over
think
the
they're
year.
I think they're ready to, right?
Right. I mean, yeah, it's just a matter of bringing completing wells, if I remember right.
Right. And one note now that we're talking about different countries and whatnot, I do want to point out a couple of things when I look at a lot of discussion, especially here in the United States, about politics and sanctions and whatnot. I want to show you something. Venezuela and Iran. Venezuela has been on and off on sanctions, but if you look at 2021, the combined of Iran and Venezuela was around 3 million barrels a day right here in 2021. They have grown by over 1 million barrels a day. So when you look at sanctions, you got to look at the actual absolute effect, and some of the sanctions just don't translate to the allowance of growth. There's a lot of reasons why. We're not going to cover that today. If you want to find out about it, drop us a comment. I was about to say drop us a like. Drop us a like. Go ahead and drop us a like. If you're enjoying this, drop us a like. So now back to
So the other side of
the
that, Brian, when we talked about the sanctions, what we're not seeing when we see some of this data, especially around Iran, is what they refer to as the Black Fleet or the Shadow Fleet.
yep.
And so the ships who go in to pick up oil from Iran turn their transponders off as they go into the ports, and especially the main port there in that island. And so you will see um, that oil typically goes either to India or China. So you sort of have to begin to look at both what China is receiving, and there was a lot of thought about that. China was, it looked like their demand was down. Now I realize a lot of this demand issue on China is based on satellite imagery, not on real data coming out of China. And so they're looking to see where the activity is in the heat islands are in China to determine if the demand is going up or down. But that little
Well,
island there,
that is where most, if not all, I think most, because they have diversified it a little
I
bit.
think it's about 75%. I think there's another port just south down there that also exports oil.
Yep. So essentially, the fact that you don't see any red dots here is it indicates from a satellite GPS positioning that there's no ships there. But if you looked at satellite imagery, there are ships there. So that is what we're talking about, and that's actually
Right?
what we cover and what we evaluate when we're looking at crude oil supply and demand and imports and exports and all those different factors when we're evaluating that. So recapping the past, December 2023, OPEC Plus decided to cut 2.2 million barrels a day. Saudi Arabia is doing the heavy lifting. Again, news sources and many sources are saying 1 million barrels a day is what is carried by Saudi Arabia. It's actually closer to 2 when you look at their actual production cuts. When you're looking at their production cuts, you can see it right here. Come on, load. Come on, internet. Let's go down here. There we go. All right, let me take this off, And when you take it from 2022 to here, you can actually see when that cut actually happened and how much that actually was cut from 11 million barrels a day down to 9. So this is why they cut. Now, let's talk about, wait a second, who are we? If you're
Who are
watching
those
this,
guys?
hopefully you know who we are. You may not.
It's
My
deja vu all over again.
It is deja vu. Who are these two nerds? Who are these two guys?
These are, according to the intro, energy experts. Of course, you know what my
So,
definition of an expert is, don't you? An X is a has been, and a spurt is a drip under pressure. But
so,
uh,
so your name is?
my name's Bill Shanahan, and I
Yep.
have, gosh, how long? I started in this industry in 1977.
And what was your goal when you started the industry?
Well, I was, back then I was just throwing dinosaurs in tar pits. That's what I was
There it
doing.
is. There it is. So, um, Bill has had a storied career in a lot of different functions and facets in the industry, both from the production side. Well, I say both, from the production side, from the consumption side, from the midstream side, as well as the trading side, as well as the electronic side. And we got to meet each other in the mid 1990s and have worked together a couple times. And after years of struggling, trying to understand energy markets, we created EnergyRogue.com, a one-stop shop for insights on crude oil, natural gas, NGLs, and refined products. We do cover electricity. We track rigs. We track production. We track demand. We track storage. We track stocks. We track just about anything that you would want to know, and we condense that into usable packages. And our base product is through Rogue Radar, which gives you a kind of a red light, green light of what's happening on natural gas, and along with this newsletter that tells you everything that's happening on the energy markets. I'm actually writing this right now. We're not going to release it until after the OPEC Plus report tomorrow, but then we've developed a convenient green or red, showing green as a bullish indicator, red as a bearish indicator, and then add sentiment, what is happening in the market. And essentially, this gives you a condensed way to look at the market and say, this is what I need to know. So one of our members actually said, I'm so glad to get this. This is everything I want to know. This is everything I want to know. And you've packed it in a very condensed format. In
And Brian,
addition
you
to
did
that,
leave something out there. You left something out of that little list. Go back down there and let's go pull that thing back up.
wait, this one?
Yeah.
Yeah,
Go up, go up, go up, go up, go up.
keep going.
Yeah, right there.
Weather.
Weather. It's natural gas season, man. Weather makes all the difference. There's three things that change the price of natural gas in the winter: weather, weather, and weather. And so it's sort of like real estate: location, location, location. And natural gas is weather, weather, weather.
Right,
And so, and whether that weather is in the US or in Europe, we follow that and
right.
help you have insight as to what LNG does. Now, remember, LNG has a finite amount we can export, but we're starting to bring first quarter of 25. We're bringing on some more LNG. Canada's bringing some LNG. Mexico looks like theirs is delayed a little bit,
I think
but they're
so.
also bringing on some LNG.
Yep.
So, so we
So
track all that for you so that you don't have to keep up with all that mess.
Yep.
Because believe me, some days it's sort of like dancing with an octopus. You don't know where to grab hold.
So listen, for $89 a month, you actually get access to our entire platform, and you will get not only Rogue Radar, but you're going to get access to all of these charts. And this is actually going to be changing in the new year. So if you sign up before the new year, you are going to be frozen into this plan. So $89 a month, and that tells you everything that you want to know in this weekly PDF alongside this robust over 150 charts that are interactive and downloadable. You can put them in presentations and deliver that. But $89 a month, that gives you everything premium. What is premium, Bill?
So premium takes you one more step further. What
Yep.
we try to do is not only give you our ideas, but it allows you to communicate with us, especially through our Discord channel. Boy, somebody got lengthy there, didn't they? Oh, that was you.
Well, this
Imagine
this
that.
is actually our presentation. This is
Oh, okay.
an advanced copy that our Discord group got of our presentation with a
So,
little bit more narrative about it.
and in the Discord channel, it allows you to get feedback on your own ideas.
Yep.
And we have sometimes spirited debates. We don't call anybody names. We're all friendly about this, but it allows you to say, "Hey, well, what if this happened? Or I read this, or I saw this.
Yep.
Did anybody else see that?" Somebody said, "Well, y'all saw that, but it means this, or it does this," and it allows you to have feedback almost immediately on some of the stuff that you're seeing that's affecting the market.
Yep.
So that in itself is worth $179 a month, but that's not all you get. You get time with Brian and I. We will spend some time with you on that. And it's just when you're talking about premium, if you're active in the market, you need to be on premium.
Yep.
And
That's
believe
exactly
me,
it.
you are not going to find that kind of information, that kind of response anywhere in the market for anywhere near that lower price.
Yeah. I mean, most
You know why? Because we know we look every
Well,
day.
we look at our customers. If you just go to our homepage, you will actually see what our customers are actively saying, which is right at the top. And plus, you can scroll down. Don't take our word for it. Just read through some of these. These are real customers. These are people that are on our platform. And so we would love to see you come inside. We're starting a movement because any competing platform probably costs 2 to 10 grand a month, and we don't think it should be that expensive. But if you or your business depends on the price of the commodity for crude oil, natural gas, NGLs, refined products, electricity, you need this resource at a minimum. But that's your choice. Would love to see you inside. If you join, we actually have a welcome call with every single person that signs up.
So
So
come go rogue with us.
come go rogue. So commercial over. Whew, that was yeah.
Yeah.
Boy, some chicken wings had really hit the spot.
It's about that time, isn't it?
Yeah. So the present, where are we today? 2023. 2023 saw demand growth of 2.6 million barrels a day. Okay. That was the
Right.
demand side of the equation. We talked about supply, which OPEC plus cut 2.2 million barrels a day. And when you look at the 2023, 2.6 million barrels a day of growth from 2022. Now, from COVID to 2023, it was a stair step of demand growth. So you can't just look at 2.6 and say that is a normal year. 2023 was still in recovery, catch
Right.
up from orders from COVID backlog, because the entire globe took a year off. So
Yeah.
or like it. I don't know.
And
Maybe
really didn't start recovering
more like a year.
till middle of 2021.
Yeah. So at that point in time, they were looking at a slowing demand growth for 2024 is currently 1.8 million barrels a day. For 2025 is projected to be 1.5 million barrels a day. This is taken from OPEC's guidance. You will come up with a different number if you use IEA or EIA. OPEC delivers a monthly report, which is very extensive, which is something that you should read. It's over 100, well, usually over 100 pages. I think this last one was like 92, but we read through that every time and we deliver what is the key values that we got to take out of that. So, and a couple of things on global storage, we're 34% higher, and US inventories are down. There's a financial reason why. It's not a fundamental reason why, but
Right.
inventories are down in the U.S., and that's due to financial. That's not due to fundamental. Global storage is up. But the main thing that OPEC had in their decision logic is they were evaluating the 2.6 million barrel a day growth they saw in 2023. They did not expect for 2024, and combined with added volume from US, Canada, and Brazil is the reason for the cut. Now, today, now we're looking at a 1.8 million barrel a day growth, which is slower than 2023, and even less demand growth in 2025. This is the reason that you can look at the delay that they had from December 1st to December 5th, because they're prognosticating, and whatever decision they make, even if it's a short-term decision, is going to be viewed as market guidance. Okay,
Right.
that is the thing. It's going to be market guidance of what to expect in 2025.
At least on the supply side.
On the supply side. Yep. So,
And by the way, you know what's interesting about all these numbers?
What's that?
They're never correct. You know, they're never the absolute number.
It's a mystery wrapped in a riddle inside an enigma.
Exactly. That's exactly right. And but here's what's important. It does give you a trend. And so that's what you go by, is you start looking at the trend and use your own guidance sometimes. I mean, if you want to spend all the time and looking up the EI reports or IEA reports or the EIEO reports, doesn't matter. You need to be able to get more than just your own.
Did you just quote the song Bingo?
No, it's, you know, to me, the EIEO report is the Farmer's Almanac. So whatever you use, be sure and test it. And that's what we help you do, is we help you go out there and test it with the real world numbers.
Well, and evaluate. If you're comparing numbers and you're comparing demand growth, do not look at OPEC report and then IEA the next month. You're comparing apples and oranges, because data variances, especially after COVID, I don't know what COVID did. Now, all of a sudden, if you go to one source versus another, you're going to come up with, on natural gas in the United States, for example, the daily production has a 5% variance depending on the data source. A 5% variance.
Always look at the readjustment as well.
Yeah, which is usually woven in. So,
right.
But the main
what
thing
you're
is
seeing in the adjustment, that they've changed on crude oil to where the adjustments are always up now instead of down.
Right. I know what you're talking about. Yep, that's on the U.S. production, and you got to look at liquids production, but we're not going to get into that. So today, OPEC Plus is looking at slowing demand growth. November has had a pretty strong demand month, but some of that, it's coming off the heels of a terrible October month. And so what to expect the next 6 months. Now, this is where we get editorial. This is not financial advice. It's not trading advice. Do your own research. Read all the disclaimers below, especially if you want to fall asleep at night, because disclaimers and legal knowledge, if there's any attorneys out there, apologies, but
it's a cure for insomnia.
This is where our editorial thoughts come into play. The future, which we're defining as the next 6 months, because some people might interpret that as 5 years, production hikes, a likely delay of 180,000 barrel a day hike that was initially set for October? It was initially set for October.
Yes.
Deferred to November, deferred to December. Now it's deferred to 2025. This is going to be, I don't think 180,000 barrels a day would really move the market. It's more about principle than 180,000 barrels. So
and I think they're going to initiate at the first of 25 some sort of hike.
I think there's going to be a hike in January. Even though there's likely a delay, this is the future and expectations based upon what the market is expecting. Market's expecting a likely delay of the 180,000, But the big elephant in the room is, what about the 2.2 million barrels a day? What about the 300,000 for UAE? What about the 500,000 for UAE? So the production hikes, supply concerns. There's still concerns about US, Canada, and South America. South America, Guyana, and Venezuela have continued to add, but Brazil is really the one that has come with a lot of new barrels to the equation. The US is kind of
but they're
stalled.
under their guidance though. Brazil's under their guidance. They brought on
That's
some
right.
more barrels, but they have not brought on all they thought they were going to bring on.
And I want to dispel a little bit of a rumor here. There's a lot of discussion about US production growth, and we've actually been tracking this and maintaining that. Yes, we have grown, but after that barrel a day spike, oh, that's in blue. Let's change that back to white. After that million barrel a day spike to 13.2 million barrels a day, we've only grown 300,000 barrels a day. And that is because of something that we track. And part of what you can get with Rogue Edge is you can look at this handy dandy chart and you can evaluate what the total production change, which we are adding barrels every single month. But look at the scale. That is 60,000 barrels a day. And I want to point out something for those that don't know, but 13.2 million barrels a day, if you do not bring on new volumes, will be less next month. How much less? Over 600,000 barrels a day. If you do not bring on new supply in the US, next month we will drop by over 500,000 barrels a day of production. Now, the reason that you don't see that is because we have new crude oil that is coming from different basins, and we are currently adding more than that decline. So think about it this way. We're having to bring on 670,000 barrels a day to make an additional 60,000 barrels a day. There's a lot of economic momentum, and the fact of the matter is the rigs do not support a lot of production growth. But there are
And we're running out of ducks as well.
yeah. Supply concerns. Canada and South America are what I would watch if I were OPEC. If you're OPEC and you're listening, hi. Nice
Yeah.
to see you. If you're
Hello, Mr. OPEC.
hi, Mr. OPEC. So there is concerns about supply. Weak demand growth this year has shown weakness in addition to 2023, which was showing some slowing. Global concerns are dampening the outlook. That has been a theme all year. Hasn't that been the theme that we talk about every single week, Bill?
Yes. Yeah. It seems like every week we're talking about China.
Yep.
And I really think that India is going to be the shadow horse that comes in here, and I don't think we're quite grasping, because everybody looks at demand growth as a straight 45-degree angle curve, and it is not. As emerging economies get to, I want to say I was just listening to this the other day. I think it's $9,000 GDP per person
Okay.
that they double their fossil fuel use.
Oh, wow.
Yeah, that's what I'm saying. As these emerging economies come up, you're going to see that demand spike. And that's why I think when we say 6 months, I'm in agreement with the numbers we got for 6 months. You go out 5 years, you're going to see us looking at 100, I think 115 to 120, even as high as 125 million barrels a day.
Wow.
And we
Well,
do
and
not have the supply to back that up.
that actually lines up with some of the long-term guidance that OPEC has. Is
Mhm.
because they're showing a growth of about 20 million barrels a day. So they
So
are
think about what it took
considering.
for us to grow 2 million barrels a day in the US.
Mhm.
I mean, it took what, 2 years and lots of rigs?
Right.
Lots of rigs?
Lots of rigs. Lots of rigs.
Yeah. So now we want to grow it by another 25%. That's pretty significant.
It is.
So,
So the
anyway,
other
so that's why we talk about the future. Next 6 months, I'm really good with these numbers. You start moving out further, I'm very bullish on oil and bullish on natural gas too, for other reasons.
right. So here's the consideration that OPEC Plus is considering: the production hikes, what to do with the supply nations, because they have really taken on the role of balancing the global market. Supply concerns from US, Canada, South America. We have our own opinions there. And again, this is the narrative part. Do your diligence. None of this is trading advice. Weak demand growth is still ever present since last year. Geopolitical factors, a lot of discussion around Iran, Venezuela, especially with the new Trump presidency, on whether or not those will really impact things, because I want to show you this. This is something that we dive into. And this is part of the power of this tool, is you can ask yourself some questions and say, okay, well, Iran has been sanctioned, right? Right? They've been under sanctions.
They sure have.
And over the last couple of years, right? So under sanctions, this is what their production has done, gone down to 1.9 million barrels a day, which is about the native country demand of Iran. So they were at the absolute minimum just to fuel their own economy, and they've grown to over, what's the latest number, October, 3.35. So that's over 1.5 million barrels a day.
Well, it's a good thing they were under sanctions.
Well, what does a new presidency hold for those sanctions? Are they going to be enforced a little bit better? Are they going to do something different? But what we've seen is out of Venezuela and Iran, it didn't sway any of the production.
Right.
U.S. productions trends are headed down. And we are still growing, but at a much, much slower pace. Again, if you notice the scale on the left-hand side, this is the chart I was showing a little bit earlier. We are only growing by 50,000 barrels a day each month. And it takes over 670,000 barrels a day of new production to get that 50,000.
The more production we create, the bigger the decline curve comes.
Right.
And so it's almost inverse. So you have it's fascinating. So it's in most of that's been coming out of the Permian, and I still think there's still a lot of rock to get oil out of the Permian, but it's going to become more gas here. So now we're looking at more infrastructure moves in the Permian to make sure we can get the gas out to produce oil.
This chart shows you why everybody talks about the Permian, because you can see this kind of light brown or orangish is the Permian. That is where the production growth is coming from. Everywhere else is shrinking. So these scenarios, not trading advice. These are our opinions alone. It's not, we're not financial advisors. Read all the disclaimers below. And before you do anything, please do your own research. So scenario one, they restore production in Q1 2025. Key question is, how much? How much do they, 180,000 or 2.2 million barrels? There was rumors earlier this year of a price war. Now that price war was actually directed at something different than the last price war, which we saw 2014. And that was directed squarely at the US shale producers. But if oil production is resumed or restored in Q1, we would nosedive. If it's 180,000 barrels a day, maybe it's a $5 move. Maybe it's a
1 million barrels is what moves the market.
Yep. So if you brought anywhere north of 500,000 barrels a day in the first quarter, we're probably going to see a $10 plus movement on the price. The winners, consumers, yay, cheaper gas. Non-OPEC producers like the US and Brazil would be hurt, as well as budgets of OPEC plus members.
So a little bit different thing that's on now than was 10 years ago, and especially 20 years ago, is Saudi Arabia has more debt.
Mm-hmm.
Back around the turn of the century, they had no debt. And so
Right.
changing the production in oil did not have the impact on their own economy as it does now.
Right.
So that's the other thing that's new in the balance is they still have to make debt payments, and they need the crude oil to be able to do that. So
Well,
they're going to
and
want to
this,
produce to get more money, but they don't want to drive the price down so much to where if they produce more, they don't get any more money.
yep. And this is the balancing act. OPEC members would be losing because that budget would come under pressure, especially Saudi Arabia. So now this is grabbed from public documents, public things out there. Needs $96 a barrel for Brent to balance the budget. I've seen different numbers here. Don't hang on to that number
Yeah.
and say that's what it is. I have seen $80, I've seen $70, I've seen $110. So if you talk to 10 different people, you're going to get 10 different answers. Don't hang on to that. But the key is where we are today at $70 Brent, right? 70-ish dollar Brent. We are looking, where is Brent today? Brent is 72,
Yeah,
72.50.
72.
So 72.50. It's north of there to balance the budget. Combine that with they also have 2.2 million barrels a day or 2 million barrels a day offline. So if they restore production, this is the quandary. If they restore production, they're going to add 2.2 million barrels a day, but it's really going to cost them a potential $20 barrel a day move.
And you know what happened?
All those who's down in Whoville will all cry.
Oh my gosh. Yes, it is that season. So scenario 2, they extend the cuts for Q1 2025. This is what most oil analysts have been discussing, that they got to kick the can down the way. I have seen some people expect that they're going to go into Q2 and maybe even the first half of the year. I think there's probably going to be a lot of hesitancy to do something like that. And the reason why is because when you look at the hesitancy of going into Q2, that means it is a year-long signal to the market that OPEC plus members see that the demand is not going to recover in the first half of 2025.
So I have a thought process on this, Brian, and
What's that?
one of them is that I really think what we're seeing is OPEC is trying to wait out the decline curve in the Permian Basin in the U.S. production, because
I
basically,
think you may be right.
basically they can, for lack of a better term, they can turn on their oil faster than we can drill our oil. And so if the demand is high enough and the supply goes down, price goes up, they can take advantage of that price spike, where by the time we were able to mobilize and do that, it would be gone.
So what's fascinating is I heard this commentary this morning on Gulf Intelligence podcast. Andy Levine out of UAE. I think he's in Dubai. But Andy was saying this morning, and Ali had great comments as well. Ali out of Oman had great comments. And if anybody from Gulf Intelligence or over in UAE, hi, good to see you. But both of them had great comments. Ali said there has to be some plan for resuming production because some of the OPEC plus members are getting are losing some patience, because their budgets are suffering. Andy had a great comment to share from a previous previous oil minister from Saudi Arabia. And it was when the oil price is high, it allows all the other producers to produce. When the oil price is low, then OPEC, Saudi Arabia has domination of the market because they can produce at a much lower cost point.
their lift cost is lower.
Their lift cost is lower. I've heard numbers down to $10. It's probably higher than that, maybe $15. But if you're at a $40 barrel, they are still making money, where most Permian players cannot make money at
Now,
$40 a
the
barrel.
fact is the entire US would shut down probably at $40.
So that engine of 670,000 barrels a day of added production to get that 60,000 barrel a day increase goes away, which means we would lose 500,000 barrels a day in a
Oh,
month.
we'd lose
or
more
2
than that
months.
because that's just off decline. Just think
Yep.
about people shut in for price.
Yep.
I think you'd see at least 1 million barrels come off the market.
Right. The winners would be OPEC Plus. It gives them short-term price support. Producers with high cost break-evens, it kind of helps them. The losers would
Right.
be geopolitical risk escalates as Iran and Venezuela sees their market share eroded by sanctions. So that is something that may come into the geopolitical thought process. When you look at those sanctions, you could actually almost balance some of those sanctions, which we just saw Iran representing 1.3 million barrels a day of growth versus the 2.2 million barrel a day cut, and kind of balance those. This is where some of the international geopolitical implications and discussions really come into play. So that is something to watch as well. You get somebody asked me once about politics, and I said I never wanted to go into politics, but unfortunately I chose energy. So that's that's what it feels like. So scenario 3, they extend the cuts for the second quarter of 2025. And again, for frame of reference, restoring production 2025, a big hit, maybe a $20 a barrel hit. They extend the cuts for Q1 in some way, shape, or form. The 180,000 barrels a day, I don't see as really that may have a $5 barrel swing in the market, take Brent from 72 to 68. I don't see it as a big one. But basically, that is a status quo. Let's kick the can, see how the first quarter of 2025 goes. Scenario 3, extend the cuts into Q2 2025. This one might bring Brent. I have $80 here. I think that might bring Brent back up to 90. However, it probably would not topple. It would probably level off around $80. And the reason why would be that's also a signal that some of the demand research that OPEC Plus walked into is that we're not going to see demand recover in the first half of 2025. So there's kind of a yin and yang.
Yeah.
It's not going to bring new barrels on, which would be bearish because it would add supply, but it also means that OPEC Plus has an insight that we're not going to see demand really truly increase. What do you think about this one, Bill?
I think it's sort of masking what the wild card is, and that's any detrimental geopolitical events. I mean, we are still in 2 wars.
Yep.
I mean, we are in them. There are still 2 wars going on. And we can say we're not in them, but we're sure providing a lot of arms to both those wars. So I think extending the price cuts the production cuts, I don't think that's going. I think you're going to see some increase in deal. They cut 2.2 million. I really think that even at their most bold statement, they would only bring on another 1 million barrels for 2025 total. I don't think they bring on a whole 2.2.
You mean by choice or by
choice?
ability?
By choice. No, by choice.
Okay. All right. Because ability is there.
They got the ability to do it. But I don't think, because they cut 2.2, I don't think they're going to bring the whole 2.2 in 2025. Mainly because I think they really believe that if they choke it back a little bit, they can sort of starve out the U.S. producers and watch the price go up, and they'd rather sell the oil at a higher price.
Right. The winners would be OPEC plus leaders like Saudi Arabia and Russia, who are playing the long game. The losers would be the high demand regions, especially Asia, would face higher import bills. and non-OPEC producers get a boost to expand production. So that is kind of the winners losers. Scenario 1, restore the production in Q1 2025. Scenario 2, they extend the cut. Scenario 3 is they extend the cut to the first half of 2025. Scenario 2 is what the market expects. Okay, this is part of the reason that we have not seen prices
Let's put it
significantly
this way.
move.
This is what scenario 2 is what the market's pricing for.
Right. Right. So any difference from scenario 2 is where you're going to see volatility in the marketplace.
Right.
If there is, I do think in January they should allow the 180,000 barrels to just turn it on. Just allow that, because they said that in October, November, December. 180,000 shouldn't, quote unquote, shouldn't move the market that much.
I mean,
But
basically, it's a tenth of
optically
1%
it
of
will.
the demand.
Optically it will, because it's not about the $180,000 barrel a day hitting the supply demand. It is about the optic, and that is the key. That
About
is
that,
actually
their willingness to turn it on.
right. So so listen, we've got it open for comments, questions, or anything like that. We're gonna stay open for about 5 minutes, but we are gonna answer every question. If we get flooded with questions, we're just gonna be here for a while. So so these are the possible scenarios. It is a high stakes decision, and strategic patience. I mean, this is a very tough dilemma for OPEC to stand on. So this is a very tricky one, because each country has a different perspective. Saudi Arabia probably has a lot more financial capability
And
to
more stable
allow
politics as well.
to allow this to happen. Russia has, since they are part of OPEC Plus, they have continued to add. Let's actually look, since we get our Russia data from the EIA. Let's see what their latest production is. Yeah, they stopped reporting that in the war. Yeah, so according to the EIA, we don't. However, the OPEC plus, or the OPEC monthly market report has shown that Russia has continued to increase. They have had periods where they've exceeded their quota, and I'm using air quotes because that quota is more guidance, and there are parties that overrun that all the time, like Kazakhstan has been a pretty big offender there. So
Yeah, I think the deal with Russia, though, on theirs, most of the time, it's just a timing issue.
Right.
On the reporting. I don't think it's, it's not sustainable.
Yeah.
It's just a timing issue.
Well, listen, thank you so much for being here. Please drop us a like. Please drop us a comment. We want to hear from you. What do you want to hear about next? What do you think is going to happen with OPEC? What do you think is going to happen? This is the decision that they're looking at. And remember.
Oh, and remember, next Friday is Hawaiian Shirt Day.
There you go.
Awesome.
So those are that's our breakdown for the OPEC Plus decision, which is coming down tomorrow, and or later today if you're somewhere where it's already turned tomorrow. It hadn't turned tomorrow yet, so but it's getting late in the day over there. So
just remember, as we get to the holiday seasons,
safety never takes a holiday.
There you go.
So listen, folks, thanks so much. Thanks for spending time with us. Really appreciate you. We planned on 30 minutes, but the material and everything, we always want to stay here and make sure that we follow this to conclusion.
Right.
So,
we used up every bit of 30 minutes.
yes, we did. So listen, reach out to us, connect with us. We'd love to hear from you. Drop us a like, drop us a comment, let us know what you think. Let us know what you think. You might think these two guys are a little loony. I don't know, but just let us know what you think. We appreciate you, and we hope you have a fantastic December 4th. So that's all I got. Any parting words, Bill?
You know, I've always wondered about you guys.
All right. Thanks so much, folks. We'll talk soon.